if banks aren't the space to go after as strongly, what is the space to go after as strongly?
I mean, for us, it's always been bottom up. The banks was a obvious story that was playing out, but we've constructed the portfolio in such a way that we can straddle the lenders and the non-lenders based on the point in time of the cycle. So now, while I think that the easy money is over, I think for banks like HDFC Bank and Kotak Bank, they're barely done well from a 2-3 year perspective, right? Both on an absolute basis, even worse on a relative basis. Now, if you say the most recent quarter, both in terms of loan book growth and earnings growth, they've demonstrated spectacular fundamentals. So at some stage, these banks will have to catch up on that rally. I'm not saying they will suddenly start re-rating, but if you're growing earnings at 20-25%, you're likely, and remember, they're no longer as expensive, both on an absolute and relative basis. Even if you get returns in line with your underlying earnings growth, I think there's plenty of money to be made. Most of us will be happy with that 20-25% sort of a return. So there are pockets in the banking sector. There are pockets within the NBFC sector as well. Remember, NBFC sector has also been punished because NBFs generally tend to suffer in a rising rate environment because they don't have the advantage of CASA, much like banks. But not all NBFCs are created equal, right? Some NBFCs have better liability franchises.
Sure.
Ones that we own are Bajaj Finance, both a great liability franchise as well as a very high enough capital adequacy ratio.
Sure.
Affordable housing finance twins that we own, Home First Finance and ours, both have very high capital adequacy ratios, which allows them to still go to the money market and borrow at fairly competitive rates, and hence you become sort of immune to the interest rate cycle. What happens is some of the weaker peers who don't have that stronger liability franchise, they tend to bear the brunt of higher cost of funding. And that makes them less competitive, and that allows these sort of NBFCs to gain market share even during these times. So therefore, there is an opportunity to play within banks and NBFCs. Like I said, you need to be discerning enough. The easy pickings are over. And at some stage, the insurance plays will also come in. Remember, both HDFC Life and ICICI Lombard are picks on the life and insurance sector, which we own, haven't particularly done well over the last 2-3 years. So there is a catch-up trade. Both have been continuing to gain market share even during this period. Yes, life insurance industry as a whole is seeing some slowdown in terms of top-line growth. But if you take the long-term story, significantly underpenetrated when it comes to term insurance in India. Likewise, on the general insurance side, both health insurance as well as motor insurance, and both are fantastic franchises. So it is a bit of an anomaly that we feel that the banks and financials in general have had a great run. Unfortunately, our portfolio companies are waiting to catch up.
Okay. In which case, my final question. So you answered that what within financials, but like I was trying to ask, that if financials selectively might be the go-to space, but like the way you came out 2.5 years ago with your financials portfolio and spoke about that pocket being the pocket to go after, is there a pocket to go after? As much as you are bottom up, are there one or two themes that emerge strongly from a cluster of companies which might be present across portfolios, and therefore the theme by itself looks strong?
Well, I think we've talked about it in the past as well. From a thematic perspective, the pharma and chemical space sort of stands out, particularly in the API space, where we're seeing both a sort of top-down theme playing out through the China Plus One factor, as well as bottom-up. Plenty of companies have built very strong track records on the chemistry front to be able to come up with new products to high R&D capabilities. So that theme continues to play out, and we have enough exposure on that as well. The other is around, I think, finally, industrials, where we might see some come back. For a long time, industrials have had a hiatus. We've had a bit of a run as far as stock prices are concerned, but from an earnings growth perspective, we haven't really seen that play out.